in.
Okay.
I'm gonna go ahead and share my screen, and then let me know if you need me. And Mara, I might dialogue with you. I'm gonna try and see if I can put some music on with my earpiece.
Okay.
And see, but I may have to, you don't have a camera, so we're gonna see how the audio sounds. So if you hang with me, I'm gonna just put some audio on. You can tell me if you can hear this at all. Can you hear that at all?
Yeah. Ish.
Can you hear the music?
A little bit. It's kind of low.
Just a little. Okay. Maybe I'll just mix that and go with it. Probably not the best solution. See David connecting to audio, so it sounds like he's coming in. He's attempting to at least. So Mara, I can't, I'm not seeing the participants. Are is anybody else joining at this point? Or are we okay?
Yeah, we have about 17.
Okay, perfect. If you guys can hear me, which you probably can, I can't see you in this webinar format. So just hang with us. We'll get started right around 9:30, so about 5 minutes. And enjoy some nice quotes. If we're trying to do some technical stuff here with one of our panelists, so we'll see if you hear us doing that. That's all that's happening in the background. And Happy New Year, by the way, to you guys. Just FYI, you will see a Mara Q&A is set up. Is that correct?
That is correct.
All right, so there should be a Q&A button if you want to dialogue with us or ask a question. You guys are all muted and no camera, so we won't be able to see you unless we make you a panelist. But if you want to dialogue, Mara will be monitoring the Q&A and taking a look at what's going on there so we can answer any questions as they arise, and we'll cover all sorts of great stuff. So glad you guys can make it, and we'll see you back here in about 5 minutes.
Okay, so how do we?
Video, start video.
share screen.
David, we have you now. I hear you.
All right, sweet.
That
So
is
we're halfway there. We're just looking for a video here.
perfect. Well, I'd rather hear you than see you anyway, so that's even better.
Sorry about that.
No, that's
Yeah. Okay. Shut the door there.
Gotcha. All right.
Awesome. David, we're live now, so we can kind of just figure out what you're going to cover on the fly. So that's good. This is live,
All right. Well,
live TV.
I have a thought-inducing factual scenario. If that.
I'm sure that'll work just perfectly. So
All right.
we'll get going with everybody here in about 3 minutes. So everybody is
Outstanding. You doing
just
okay?
join us. I'm doing very well. Happy New Year, by the way.
Happy New Year to you.
Perfect. We got people coming in. This is, just as a reminder, this is a webinar format, so you won't be able to see all the attendees. Yeah.
How disappointing.
Yeah, exactly. They're about
Exactly. Yeah.
31 so far and more joining. So we know that they're out there in the Zoom land, regardless of us being there. So we'll hang on for about another 3 minutes. I'm going to mute myself and come back on in about 3 minutes.
Outstanding.
You better not mute yourself because you may not be able to unmute. So we don't want to lose you. We have audio. So
I'm not touching any of the dials. I'm not touching any of the dials here.
Perfect. That's great.
I can hear you.
That's perfect. All right. You hear me breathing now. I unmuted myself. So I was just checking our participants here. We're up to 47. So just trying to see. Hey, Mara, can you hear me?
I can.
All right. I got a couple people. Looks like Brian Brown's here for sure and so on and so forth. So maybe I will offer up at the beginning if the vendors want 1 minute to just say, hey, then I'll tell them to put that in Q&A and see if we can monitor that. Is that cool?
Yep, that works.
All right, perfect. All right, let's go ahead and get going. We're at 51 participants, so I was waiting till we got to 50, and it's 9:30, so that's perfect. Awesome. Hey, good morning. Happy New Year to all of you. We know if you guys have been around our normal live New Year meetings, we don't say Happy New Year necessarily. We say Happy Do Year because this is the year, which is every year, that we're going to do, not just say, right? And so we like to say Happy New Year around. So a couple things we want to get started with. You know, we had planned to do this meeting at our normal Philippi Park, but I had some travel things. So if you see my background, if you can picture me, if any of you have ever stayed at a Courtyard by Marriott, you can picture where I am in the lobby, because every Courtyard by Marriott is essentially the same. And they have these little cubicles or kind of cubbies. So I'm kind of tucked away in one of these cubbies. And so if people are walking by getting their free continental breakfast, hopefully you won't see them and they won't hear me too much as we go by. So I was on the ropes. I figured this would be a good way to do it, but it's good to virtually see you. Just as a reminder, a couple things, that this is a Zoom webinar. And so because of that, you will not see the other participants, and I won't see you. So you're not on camera, and you don't have the rights to jump on via talking unless we make you a panelist. Not that we plan to, but if you want to dialogue, there is a Q&A button. And Mara Lee is going to be monitoring that. And as we need, she might jump in. If we have one of our speakers that needs to answer a question, then we'll have them do that and go from there. But we're up over 60 participants now. So again, welcome to everybody. It's great to see you. The reason we do in the webinar format when we have a larger meeting like this is because if we had all the participants, then the tile screens get real small and the people's faces tend to get in the way of any presentation somebody's making and so on and so forth. So that's good. All right, that's housekeeping thing number one. I want to give you the kind of layout of the meeting. Number two, I already said this, but some people have joined since. Happy New Year, or Happy Dew Years, we like to say here at Future Home Realty. So glad you guys are back. It's great to see you, or be with you, I should say. I don't see you. Number three, if you are one of our vendors who comes to our meeting and would like to have a quick minute, and when I say quick minute, I mean like under 60 seconds to say, hey, hello, and tell us who you are and how people can get a hold of you, you are welcome to do that. Just put your name as under the Q&A, and Mara will do that. And then I'll come back in about 5 minutes and see if we have some vendors that want to pop in and say hello. So that's kind of the groundwork. We've got a lot to try and cover, and I don't want to keep you longer than we need to. So Jim Shands and Maureen Ruck, and Jim has to, I think he's going to be on professional standards at the Pinellas Realtor Organization. And so he's going through professional standards training. So before he judges you on professional standards, they have to train him to make sure that he is trained properly to judge you on professional standards. So I think that's what he's doing. So he is in that and won't be able to join us. And Maureen has some duties with her parents on Tuesday. So that's what she is taking care of them. So anyway, so you get just me from the house, Mara and I should say. And they did give me some things we wanted to cover housekeeping wise. And so just be aware of a couple things. So I don't know if you remember, but as of last year, we made a change in our 1099 issuing time frame. And the reason is, I can get into a long diatribe about why we have to do it, but the bottom line is that we have to report to the federal government by January 31st, an official record of the 1099s that we've issued you. That used to be March 31st. And so because of that, we now have to, and once we send that record to them, then it's official, and then it costs like $50 to change after that going forward. All right, so because of that, we normally would send you your 1099s, you'd get them, and we'd give you a couple months to review them, and we'd say, hey, look, we need to hear from you no later than March 15th if you have an issue with anything that's showing on your 1099, or you don't think it's accurate for any reason or whatever. Well, that's been expedited greatly to January 31st. So now we will have 1099s being mailed by January 10th, which is, I guess, 5 days from now, right? Or maybe the 11th. I think that's a Monday. So they'll be going out on the 11th. You should receive them no later than the 15th. Now, I know the mail's been a little slower, but you should receive them by the 15th of January. Please, please, please. Now, I know I'm speaking to 83 of you right now, which is awesome. However, there are more than that in Future Home Realty's roles, significantly more, right? So like I'm not talking about 1,420 of you right now, okay? So if you see other people spread the word, we're gonna send out a reminder via email, but review your 1099, because by January 25th, you get them on the 15th, you know, based on the mail. By January 25th, I need you to get back with Maureen or Jim if you guys have any discrepancies on your 1099, because we can make the changes before we send in the master list on January 31st. We can make those changes and you know, analyze them, make sure we're all on the same page, and send that in. If after that, it's going to cost you, all right, because it's the only way I know how to do it, because you aren't, if those of you are listening, great. If you're not, you know, or if you remember on February 20th, or more than likely, we get a lot of calls on April 14th when you finally decide to go talk to your accountant and you open up your 1099 for the first time and realize that we missed a closing, or we added a closing, or something like that. Which shouldn't happen. We don't have many discrepancies, but we need to know about those now. I don't know how to better say that than please, 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 please review your 1099. When you get it, compare it to your records. If there's a discrepancy, let us know, because after January 31st, when we file this, then it costs you $50 if we have to make that change with the IRS. So just FYI, fair warning, this meeting's being recorded. I can always defend myself saying that, yes, I did talk to you about that. All right, fair enough, done. Into 1099s. If you have questions, wait till they come, but they should be going out by the 10th or the 11th. And last thing on 1099s, if you are incorporated, you will receive a 1099. That's a change we made last year as well. Do not freak out. I'm a corporation myself. Future Home Realty is a corporation. Companies that send us referral fees, for instance, like Keller Williams, Spokane, Washington, and Century 21 Great Lakes Realty in Michigan, or all these referral checks that we get, these companies like to send me 1099s. All right, I am here to tell you, and I know this is being recorded, I take those 1099s and I throw them in the trash. Do you understand? Okay, because I'm a corporation, right? I don't care what another corporation pays me. My taxes are based upon what I deposit in my bank account as a corporation. Same thing with you as if you're incorporated. Do not freak out if you get a 1099. All right, you and your accountant can deal with it. And like I said, I throw the 1099s that Future Home Realty receives away. All right, so you need to understand that. Okay. All right, cool. I think we're at the 5-minute mark. So Mara, let's go through. Do we have any vendors that would like to speak up?
We've got Brian Brown.
All right. Can you go ahead and make him a panelist?
Yep, Brian, I just promoted you to panelist. You should be able to speak now.
Well,
Oh,
yep, there I am.
there, gotcha. Hey, Brian, good morning. Happy New Year.
Good morning to everybody today. Just want to wish everybody a happy 2021 and hopefully everybody's successful. Basically, I just wanted to thank everybody for their business for 2020. For those people who are not friends with me on Facebook, we have a contest called our SLC sales thing every year. And who would have thought in 2020 and COVID that I would actually qualify for a trip to Panama? And that's Panama City, Panama, not Panama City, Florida.
I've been to Panama City, Florida. And
I just want to thank everybody for their business. And for those who have not tried Old Republic Home Warranty, give us a shot in 2021. And I wish everybody a great 2021 and hope everybody makes loads of money. And
awesome.
I appreciate everything you guys do. Have a great day.
Brian, how do we get a hold of you? Best way to get a hold of you?
Oh, that's probably a good idea.
Yeah.
Phone number 941-720-1415. And my email is brianb@orhp.com. And one more thing, we have a new plan coming out in February 1st. And yes, there is a price increase.
Well, there you go. See, Brian, we love his brutal honesty, because if they don't have price increases, how can they pay for your trip to Panama?
Correct.
Right?
Yes. or everybody's refrigerator this year that we replaced.
That's right. Exactly. Because they were home more often and all the extra. I can imagine that. That makes complete sense to me. Hey, real quickly, Brian, on the home warranty front, you kind of covered that, but when is your trip to Panama?
It's supposed to be in April, but they may move it.
Okay.
If we
cool.
can't go in April. Yeah.
Right. Now, when you get back, you have to tell me, I guarantee I'm going to date myself a little bit, but you got to tell me how many times at your seminars that you go to and have to attend there that they play the Panama song by Van Halen. I guarantee it'll be the over-unders at least 5.
Oh, sounds good to me. This is actually a trip. We don't do any business.
Nice. So
this is actually a awards trip where they just let us go. They pay for everything and we have a fun time. So it's a great deal.
Awesome. Good deal. Well, congratulations again and great job. And thanks for servicing our agents so well.
All right. Thank you.
Perfect. Mara, got anybody else?
I do not.
All right, perfect. Good deal. That was easy enough.
Does that mean I
So-
can talk longer? No, I'm just
No,
checking. Have a great day.
Thanks, Brian. Good deal. Hey, speaking of awards and everything else, I'm going to jump out here real quick and show you guys. If you guys are on our Facebook pages, by the way, if you're not on our Facebook pages, there's a couple. There's the 100K Club, which you should take a look at joining. And there's also one called Just Us Agents, FHR, which I actually don't even, I'm not the administrator on that. Someone else does that, one of the agents does, but you should, it's a great place to dialogue, get help with certain things. If you're having trouble finding a document or whatever, it's amazing how helpful everybody is. But I did notice that on those pages, people are starting to post the reports from Stellar about the agent production and so on and so forth. So I just want to congratulate you. See how many people we got on with us now. We got 93. Maybe we'll hit 100 before the meeting's over. But I got to congratulate you guys in the midst of what was supposed to be come when March hit and everything started to fall apart according to everybody else. You guys, I predicted, right, because I was on some national panels. I predicted that Florida realtors were going to kill it. And the reason I did is because we're used to dealing with stuff like this. We've had hurricanes that shut us down for a week or two at a time, or things coming up, and we just kind of deal with adversity, I think, better than most, right? And so the proof is in the pudding, so they say, right? And the proof is in the numbers. But you guys just did a phenomenal job. It amazes me. So a couple things I want to share with you, and you can go pull these reports. By the way, it's called Market Reports or something on Stellar, but this is the office report. I don't know if you guys can, Mark, can everybody see my screen?
Yes.
Okay, perfect. This is for all of Stellar. Now realize Stellar covers pretty much, I say anywhere around 70 to 75% of the state of Florida, because it covers Tampa Bay, it covers Orlando, and most of the swap in between, and some ancillary outlying areas. The things we miss are Jacksonville has their own MLS, and the Miami area has its own MLS. So those are the two big groups that are not in Stellar. But if you pulled up just the volume by office for Stellar across the state, right? Look where Future Home Realty is. I don't know if you see this as number 2, or Charles Ruttenberg Realty number 1, and we are number 2. And this is based on volume, right? But it's also based on we're number 2 in volume and number of total sides, right? The total sides that we did, transaction sides. Now again, this is Stellar 5,069. I'm going to show you later, where I can prove to you later. We did about 7,000 transactions, right? Now this is again all drawing from that, but kudos to you. By the way, we'll make this public so you can have this when you go on a listing presentation and people say, oh, Future Home Realty. Well, we're number 2 in all of Stellar, which covers about 70 to 75% of the state of Florida. So it's, we have a presence, okay? In addition to that, as a company, write this number down, we did over 1.8 billion, that's billion with a B, $1.8 billion in sales in 2020. That is amazing. Give yourselves a virtual clap, hooray, cheers. If I was there in person with you, I would let you know. It's truly amazing. 1.8 billion, and that's up. I think we did 1.6 billion-ish last year in 2019. So in 2020, over 1.8 billion, that's a B, dollars worth of real estate. So kudos to you guys. You guys are part of something big, and it's something big because of you, not because of any of us. We're just here to support you guys as you do your business. So again, congratulations. Now this is the individual agent awards for Stellar. Again, for our offices, the only office from Future Home that is not included in this list is Jacksonville. So the Jacksonville agents are not included in this because they're not part of Stellar. But this is our highest producing agent. Now it doesn't separate out teams. So some of these people are team leaders that run all their business. So There's a million ways to look at this, and I know everybody likes to do this, but if you want to know just some, we got Michael Separano, who did 97.5 transactions and almost just shy of $40 million in sales. All right. Julie Parker, 61 transactions, 31.7 million in sales. Jill Doika, 81.5 transactions, 25 million in sales. Manuela Woodrum, 72 transactions, almost 25 million in sales. Incredible numbers. Go down. John LaRocca, Bruce Donovan, John Brokaw. By the way, we'll cover this later. See, I'm number 8. Do not get excited. I am not a competing broker, right? This volume, and Mara can attest to it, all right, is based upon, and I'm going to cover some things later in some other housekeeping items. This covers the times when you guys list your homes with me as a limited services agreement, because I make you do that, or that's one of the options you have when you are selling a home that you own, that you have ownership interest in. So do not, that's solely, trust me, I'm running a business that has agents, 1,500 agents that do 1.8 billion in sales. I don't have time to list these properties. These are all limited services listing agreements for our agents selling their own property. So don't freak out about that. So skip me. And we got Cindy Hayden, Janina, Philippa. If you're on right now, I can't tell all the participants. So congratulations to this. One thing I just want to point out real quickly. This right here has about 1,079 agents on it, right? This report in particular, right? I want to go down to where we hit the total volume, and it takes us to where we finally get to somebody who is below 2 million. We've got 258 people that did 2 million or more out of 1,079. I ran the numbers, and that it comes up to about 24%. Now, that's a number I track quite significantly because I love to compare it to other companies, all right? Most of you, a lot of you came from Keller Williams. And Keller Williams, they set their whole cap, right, based on, which I think the cap is higher than ours. It's an answer I know, right? But they set their cap based upon the $2 million producer. And I looked at that $2 million mark as a barrier because of that a lot of times. And, you know, I love the fact that Keller Williams, you know, promotes themselves as the training experts of the world and so on and so forth, right? But if I go back and look at the Keller Williams offices in the Tampa Bay area, in particular, when I monitor them, they have a smaller percentage of their agent population. It's right around 20% on average that hits that $2 million threshold, right? So after all their promotion of, hey, we're the best training, we do all this for you, they have a smaller percentage of their agents hitting $2 million mark than we do. And then we have other companies that pretty much, you know, and one of the reasons I think we do is because we still offer a ton of great training, right? We've got a lot of good stuff available. I think we kind of have the best of both worlds. But it's amazing to me to see that little training, a lot of training. What I've realized is that those of you, and many of you are there, that want to succeed. And remember, success is different to everybody, right? Whatever your level of success means to you is, you know, important to you, right? So you may, hey, look, my goal is to be able to make $30,000 extra this year. And that's totally good with us. That's why I created the model the way I did, so it works for everybody. But I'm just really, really, really excited and proud of you guys. It's amazing to me to see how the volume that you've been able to produce in times of supposed adversity. You guys just said, forget it, I'm going to succeed anyway, and have done a phenomenal job. So we'll make those public. You can pull those reports from Stellar on your own. I have some other reports I can pull from Broker Metrics. If you have questions on some of that, put it on some of the chat pages. People have already sent some, I think, posted some tutorials on how to go pull the information, and it's all there. So congratulations again. I just wanted to celebrate that production as we go through. All right. Okay, moving on. A couple things I wanted to clarify on some contracts, and this might lead into a question that David, either if you have an answer for or might need to research for us coming up. I'll save that one for the end, and then if you don't have it as part of your thing, you can maybe say, hey, I'll catch up with you next month. So as a reminder, the purchase and sale of your own properties, I mentioned that we had a prohibition starting January 1, 2020, that we do not allow you to list your own home. If you want a detailed video on why that is in place, why that policy exists. I've got a video at FHR University on the front page that explains it all. It's been there for a year now, over a year, and yet we still have people say, oh, I never realized. Please review that. There's a logical reason. It's not because I want to see myself with 51 transactions and 16 million in production. That is not my desire. My desire is to keep us as a going concern. Those of you that are taking an accounting class, there's something called a business. You want a business to be a going concern, which means it's profitable enough to live to exist another year, right? And so there's some things legally that I had to make some changes to protect ourselves, all right? David, are you raising your hand or are you? No? No, okay, perfect. So purchase, selling your own product, just as a reminder, take a look at that. Also a reminder, safely conducting businesses for all parties, right? Remember, every situation is unique. We've got some people that are highly in vulnerable situations and with elderly parents at home and so on and so forth. So they have a different level of concern about mask wearing and COVID and all this kind of stuff. So be sensitive to where everybody is, right? And so the proper way to have a showing or to conduct any business is to make sure there's proper communication between all the parties involved and make sure everybody's on the same page, okay? So just make sure that if someone says, hey, look, a seller says, hey, look, I'm elderly, I'm vulnerable, I don't want anybody in unless they're accompanied by an agent, and everybody has to have masks and gloves and booties, and that's the only way I'm going to allow showing, then decide if you want to see that property. And if your client does, then abide by their concerns and their wishes. It's pretty much that simple, right? If somebody else comes along and says, hey, look, if the house is vacant, I live in, you know, Bloomington, Indiana, and it's an extra home that I was selling, and I'm never going to be there, so show away, have at it, then there's one less person to worry about. The seller side of it, you can just deal with in the other. So just communicate that, please, as you go through. And final thing before I get some time with David is disclosure. One of the other reasons, right, that I have the prohibition on you listing your own homes anymore is because of disclosure issues. When I say disclosure issues, I'm talking about latent defects, all right, in a property. I want to go on record because I've had several depositions lately saying, how do you talk to your agents about disclosure? How do you talk to your agents? What kind of training do you have on disclosure? And you have heard me say it 100 times, so here's 101. I would rather you over disclose than under disclose, right? Does everybody understand that? David, I think you can attest that that's been my philosophy from the get-go, that I would rather see you over disclose something than under disclose something. And if it's your own property, then that means you're doing it now on your own if you're with Future Home Realty through a limited services agreement with a no brokerage relationship with us, so I don't get blamed for your non-disclosure. There is your answer why I have that rule now in a nutshell. But the answer is, if you know of something, you need to disclose it. If you are listing a property and the seller refuses to disclose it and you know it's something that should be disclosed, you either tell the listing agent, the seller, I have to disclose this, or I need to walk away from the listing. All right, it is that clear a line in the sand. It is not a gray area. Disclose. Perfect. Finally, David, coming to you. I have had 3 questions in the last 7 days, right, about solar panels. All right, okay. Now, if you guys want to get in a personal chat with me, I can tell you about my thoughts on why somebody would pay $200 a month for the next 20 years to save $200 a month. But that's, you know, here nor there. Okay. But the problem is these people are signing these long-term agreements with these solar panel companies. And now they say, oh, I got transferred. It's time to sell the home. I'm 8 months into my 240-month agreement with the solar panel company. I need the buyer to take this over, right? Here's the reality, okay? Your seller's made a bad decision more than likely, all right? And a buyer, all I can say is this, is that there has to be full disclosure to all parties if there is something that's going to stay with the property And if there's going to be an assignment of this solar panel gig going over to the new buyer, then the buyer has to have time to review that document, take a look at it, have it inspected. No, probably should have that agreement reviewed by their own attorney to make sure they understand exactly what's going on and what they are taking on and how long that would be, because it can create a lien on the property. This could open up a million questions. I get it, but you're going to have to sift through this, and hopefully we're going to continue to get more clarity on these things because it's becoming more and more of an issue. It's not an issue when people were putting them on, but now people want to sell the houses that they've put them on, and they've paid for about 1/22nd of their agreement, and they want the buyer to assume the other 21/22 of their agreement, and it's not going well. I'm just telling you. So be aware, if you go to list a home or buy a home that has solar panels, red flags, radar should go up. Okay, what are we going to do to resolve this? Cool. David, leading into you, and I know we got Todd on the line, and Todd's has limited time, so I'm going to, if we can get you in for like 4 or 5 minutes, and then we'll get to Todd, and then we'll come back to you if we have to, if we need to on anything. But any thoughts on the solar panel? Have you run across anything yet?
The short answer is yes, absolutely. Anytime there's a solar panel and something less than cash, full lump sum payoff of all the money is done, which is rare. So most of the time when you see solar panels, there's going to be what's referred to among attorneys as a security instrument, otherwise known as what people might consider a mortgage, which would be a recorded instrument that requires payment. And just like a mortgage, it has a foreclosure provision. So I would immediately ask the title company to research that issue to see whether there is a security instrument recorded, and that security interest, I'm going to need to get a copy of that and let an attorney review it, because there is an obligation to pay that similar to a mortgage, that if there is a default, there is a remedy commonly called foreclosure. So that's just the getting into the shallow end of the pool, so to speak. And but that's my first thought on that.
You've begun to see it, obviously, from the title side. And David is an attorney who owns a title company, American Patriot Title. But you've begun to see it and they do record these as liens, right? Or as mortgages, if you will, on the property. Is that correct?
That is correct.
Okay. And therefore, just like any second mortgage, third mortgage is something that has to be satisfied, or I'm assuming that we're seeing some of these are assumable, right? And can be moved to the other. Back in the day, which we haven't seen in a long time, the assumption of a mortgage, but this one would be technically like an assumption of a mortgage. Is that correct, David?
That is correct. Okay,
interesting. All right, so here, regardless, you guys are not qualified to take a look at that document and say, oh, simple enough, here's what we have to do, right? It would require somebody that's familiar with looking at mortgages and liens, like an attorney, and specifically an attorney who owns a title company would be even better, i.e. David Rankins, why he's on your screen or on our panel right now to share with us these things that can be a concern, and we need to be able to dialogue with them. And I know agents well enough that I haven't even looked at the Q&A, but the Q&A is probably going to say, hey, can we just create a document, right? Well, the answer is no document's going to cover every situation. So we can talk about some disclosure of that and what that might look like. And David and I can have some dialogue, but it's not going to be a magic pill cure-all. It really isn't. We know that from the get-go that it's not going to be that. So I just want to put the alert out to say, if you are representing a buyer or a seller and there are solar panels involved, all right, beware. Mara marked this time. It's at the 10:01 a.m. mark of the January 5th meeting. So when I do have to go to a deposition again to say, did you ever talk to your agents about solar panels? The answer is yes, I did, Your Honor. At the 10:01 mark of our January 5th, 2021 meeting, I warned them extensively about how they should beware when dealing with homes that have a solar panel lien, i.e. a mortgage involved. So, David, David, real quick before, in case some agents have to leave before we have a chance to maybe come back, what's the best way to get a hold of you and American Patriot Title?
Well, we have a website, also the main office number, 813-960-0422. And we're located at the corner of Fletcher and Del Mabry in Tampa, lovely downtown Carrollwood.
Nice. Awesome. And do you have a minute to hang on after Todd speaks to hang on if we have a couple other legal questions, or do you need to run?
No, absolutely. I'm here. I want to hear what Todd has to say. Always,
Perfect.
Always good stuff. Always
Awesome.
good stuff.
Awesome. Perfect. Great lead into Todd. Todd, good morning. Happy New Year. Happy Do Year.
Good morning.
Good morning. Let me introduce Todd. Todd and I have known each other for, boy, Todd, it's probably 20 years now, right? Somewhere in that neighborhood. I guess I dealt with your dad first initially, and then quickly on to you.
Absolutely, Bob. You're like one of the family here.
That's perfect. Perfect. So Todd owns Unbehagen Advisors, and they are, I'll let him tell you what they do. They do a myriad of things now, so that's all great stuff. But I wanted to bring Todd on specifically to talk about we have a new CARES Act, or version 2.0, 3.0, whatever it is, right? That's coming out. I don't know if they're calling it the CARES Act, but it's and Todd, I don't know, and I was going to hope that, and we didn't have a chance to discuss at length, but cover round one PPP forgiveness and what we know about the tax ramifications there, because I think there's some stuff that's come out about not having to count it as income and yet still being able to deduct the expense, right?
Got it. Yep. That's what we're going to talk about.
Perfect. Good. And number two, this new round of PPP, have you seen any of the requirements? I think there's some higher level requirements, actually having to show some loss or some decrease in revenue in order to be able to qualify for the forgiveness. So I'll turn it over to you, and you've got, let's take about 20 minutes, and then we'll open it up for about 10 minutes of questions if you have time.
That sounds great. And yeah, we're going to talk about all that and then some, Bob. So hopefully, is there any way I can have screen share status in Zoom here?
Yeah, let's see. Mara, can I do that? If I make him a co-host, would that work, or?
Yes.
Okay, and if he has co-host, then he can share his screen?
That is correct.
Okay, so you're now a co-host, Todd. Now, can you, Mara?
All right, here we go. It looks like it's working.
Oh yeah, I see some stuff coming in. Yep, got it. Perfect, awesome.
All righty then, so we're ready to go. All right, so yeah, I put together some slides last night and just wanted to make sure this went smoothly, because there's a whole lot of information here, and it's great information, in my opinion, very timely. One thing I'll just say about this is that, this information came out on December 27th, right? So the government and everybody else is just waking back up here. And just like any other bill that comes out, there is lack of interpretation at this point. It takes a few weeks before SBA, IRS, United States Treasury, the accounting community can all wrap their head around what's going on. And I've been through at least a few continuing education courses on this, even over the break. And some of the newsletters we sent out to our client base were ahead of the actual bill, and fortunately, we nailed it as far as what we thought, how we interpreted the bill, even though it wasn't finalized yet, and that's usually a risk. But I just wanted to get this information out early. But this is the most current information you'll find. You're not going to find a whole lot elsewhere right now, so it's a very good opportunity for those of you that want to get a jump on the understanding of this and how it's going to impact you. And I kind of catered this to real estate agents, obviously, just because we have a great deal of real estate agents and FHR agents throughout the year. So hopefully you'll get a lot out of this. And I'll go somewhat quickly because I want to make sure that, you know, I'm keeping a timer here that we stay on track and don't go over. So I'll start the timer. So basically, just an introduction briefly, don't want to spend too much time on this, but basically, you probably have heard of us, I'm sure, through Bob and Future Home Realty over the years, and in your 1099s, a lot of times we put a little blurb about us, but we're Unbehagen Advisors. We've over the years, big part due to Bob and Future Home Realty and the growth of Future Home Realty, referrals of real estate agents have a niche now, a big one. We do all kinds of businesses, but basically we take care of all kinds of businesses, but real estate agents are a big part of what we do as well. Taxes, accounting, bookkeeping, payroll, even an insurance division, anything if you're large enough, make enough to be an S corporation, we'll take care of everything. Take that all off your hands for you. Or if you're just a Schedule C 1099, we'll handle the tax planning and tax prep for that, and just legal tax avoidance strategies, property management income, Schedule C, short sales, cancellation of debt forms, rental properties, flipping properties, 1031s. We can talk about realtor entity selection, PLCs and PAs, and then handle services to just take care of you with all your needs there. So there's our number. Go ahead and jot it down on our website. If you need anything, we're always here for you. We're busy all year. We've got a team of CPAs and EAs that work together to make sure that you're successful as things come up. So let's jump right in. And I'm going to talk about what Bob had mentioned. It's that December 27th, they call it the Consolidated Appropriations Act of 2021. That's the new thing that came out, the new bill, the new act that was signed into law. And it'll take a few weeks for interpretation, but this is what we have now. And I'm very confident based upon our sources that this is accurate, but just know as a disclaimer, just as they interpret a bill and turn it into actually useful information, meaning the IRS gets the information and then they make their forms from it, and so on and so forth. The SBA gets it and then might tweak it and say that's kind of what the bill says, but let's make this look this way for people. That's what happens when these bills come out. So this is hot off the press, and just as a history lesson, Bob said this is part 2, but if you look below here, 1, 2, 3, 4, this is actually the 5th one since COVID came out. So in our firm, we've been super busy this year interpreting all these. Normally we only get one bill or tax law change a year that really is effective, but man, we've had 5 of, this is our 5th one in 2020. We've had to interpret and go through, and going back to March 18th, this one, and then the CARES Act was on the 27th, and the Paycheck Protection Program on April 24th, and then June 5th, they tweaked it, and they keep tweaking it. So this is the latest tweak, so to speak, and it's timely because it goes right into tax season and really impacts kind of cleans up a lot of the loose ends that were sitting out there, and it adds to other things as well, okay? Just a brief history of the PPP, Paycheck Protection Programs. Back when they first came out earlier this year, back in as I stated before, back in March here, they basically the loans were available through August 8th, and the borrower must have been in operation on February 15th, and these were SBA loans. Just to refresh your memories, if you had 500 or fewer employees in a company, you were able to get these, and they were loans at a 1% interest rate and less forgiven. It was 3 years and 5 years loans, so they switched that. But as again, more information came out in interpretation by our bureaucrats from the bills, but the loans were forgiven. Then that changed to 60%, as long as 60% of loan was used for payroll costs over an 8, and then they changed it again to a 24-week period, which basically made, at least for our client base, almost all or vast majority of the clients be able to have enough payroll in 24 weeks in 2020 to justify pretty much 100% of the payroll costs. That way they didn't have to use the other 40 for non-payroll costs, which was utilities and other things like rent, and then they went into definitions of rent. And for the sake of time, I don't want to make everybody a detailed expert on this, but just know that there were some requirements and change, but a lot of people are getting full forgiveness now, especially if those of you that are just sole proprietors and get a 1099, those have become easier to forgive, and I'll get into that a little bit. Payroll costs included wages, health insurance, retirement, state and local taxes, and excluded any incomes over $100,000 and payments to independent contractors. So it was only for employees were considered the payroll costs, and these few other things. Independent contractors were not included. That guidance came out later and upset a lot of people because they were hoping that would be included as well. And it was based upon 12-month average of payroll costs or incomes if you're a sole proprietor in 2019, divided, which is the year end divided by 12 times a 2.5 times multiple. That's how they calculated your PPP amount that you're going to get. And the banks were tasked to administrate all this for the SBA. And the banks are tasked for the forgiveness side as well when somebody wants to apply for forgiveness, the same banks that you receive your PPP loan from. And I know a lot of you have received that have PPP, lots of communication from your banks via email saying, hey, we're ready or not ready, or hey, we don't know what's going on. We're scratching our heads. There's changes coming on. Wait, hold up. Just a lot of confusion. And I'm going to tell you right now, I think most of that confusion is now settled. And the banks probably with the simplified form I'm going to get into later will be ready in February with that. It's going to take them a little while still. So you have plenty of time to apply for forgiveness if you have not already. You have 10 months after that 24-week period had settled before your PPP becomes a repayable loan at that point to file for forgiveness. And you still have until the loan's matured, which is 3 or 5 years to even apply. But I recommend, jumping on this as soon as your banks say, hey, let's go ahead and do this here at this point, because it'd probably be mid-February for most of you. And I'll explain why here momentarily. But this new act adds $28.4 billion with a B to new PPP loans, to new PPP loans, and changes to key provisions of the original PPP loan. So there's a new PPP out there, which we'll get into here momentarily. And new PPP loans are available through March 31st or until funds are exhausted. So the new batch here, you're going to want to jump on as soon as the banks make them available, whenever the heck that's going to be. Hopefully soon. Keep an eye out on your bank. Call your banker. They're the ones responsible for letting you know this. If you have a PPP loan and you qualify for another one, or you haven't applied yet, you can qualify for one. And these are the deadlines for it at this point for those that are wanting to do this. Banks are not opening up their portals. Again, they're not opening up yet for this. They don't have applications yet. Again, could be a few weeks. Just keep in touch with your banker, and they'll let you know. So now this is the huge news. One of the biggest things, that's why I put it first, is prior to this December 27th bill, the PPP forgivable portions that were forgiven were taxable, which was not the intent of Congress originally, but that's just what ended up happening. The Treasury interpreted it and said, hey, we're going to make these taxable. They basically didn't allow the expenses for payroll and other costs to be expensed on your taxes in 2020, and therefore making additional profit, therefore making additional tax. But they said, hey, you know what, let's not make that happen. So any loans that are forgiven now, as of a few days ago, which, all the tax planning we've had to do with clients is that it was taxable, because there's no telling what the government's going to do. But finally they said, hey, Treasury back down, IRS back down, don't make these taxable. So neither the new or the old PPP are taxable once they're forgiven. So that's a huge tax impact and a benefit. And that also makes tax season go a bit smoother, because all those forms that would have had to been made, which would have prolonged tax season and probably into June again, have now not had to been made. So that's a huge deal. So if you've paid in taxes in advance of your PPP with your tax accountant, just know that you're going to probably get a bigger refund if you've done tax planning like you should have with your tax accountant, then because this portion of your income is no longer income, the PPP amounts that you've received. Okay, so that's great news. The the next thing is that in this bill is that they simplified how the forgiveness will be applied for loans that are now under 150,000. So they originally said in one of these acts that, hey, 50,000 or less, let's do a one-page attestation form. Now they're saying anything under 150,000, which is about 86% of all PPP loans out there, are going to be in a simplified process, because the paperwork was absolutely horrendous in terms of the average of application took 15 hours to complete for forgiveness. And that is a huge burden on small businesses and small businesses accountants, everybody involved. And, the banks are kind of throwing their hands up in there saying, you just have to deal with it, even though they're paid to give the loans out, which I don't understand. But regardless, everybody, the small business owner was basically burdened with this process. So they said, look, let's just make this a simplified one page for under 150,000 in PPP, which covers almost every one of these real estate agents that are on this call, I would assume. And that's the intent of this, is to make it easy. All right. So that simplified form will not probably come out. Again, SBA has to interpret this. The banks have to then talk to the SBA, make sure that their application portals are right, and match what the SBA wants. But that could be until February. Okay. So just keep your eye out for that. Just note that just because it's simplified, you're basically need to keep your payroll forms and other forms for at least 4 years. And if you're self-employed doing this as a sole proprietor on Schedule C with no payroll, 3 years for other records, but just keep records for 5 years anyway. Just I'll round up to 5 just to be safe in case they ever audit and look back. But, it's basically available for PPP1 and PPP2. And the SBA has 24 days to issue this one-page form. And then again, the banks are going to interpret it. So on the form, it'll have the number of employees retained through the loan. It'll ask you how many employees did you retain through the loan. Obviously, if you're a sole proprietor, you'll say 1. It'll just ask you estimated amount spent on payroll costs, or your income as a sole proprietor, I'm sure. I mean, we don't know what it's going to say yet, but these are the general ideas. And it'll ask you what the total loan amount was that you received. So that's the hardest thing you're going to have to answer, and then say, hey, did you need the funds? Basically, you say yes, obviously, and sign it and move on. And that'll be it. You still have to apply, though, for forgiveness. It's not automatic, but let me be real clear on that. You still have to go to your bank and apply for forgiveness, even though it's a simplified form. Okay. So moving on. If you've already received a PPP, there's now a second round that you can access if certain requirements are made. And they call these the second draw loans. And in this one, you can reach back out and get more PPP funds if you've got fewer than 300 employees. You must have already used, or you will use, all of your first PPP loan, which I don't know who hasn't. I don't know how you wouldn't, but in theory, basically, if it's forgiven, you'll be able to, get another one. If you're able to show a 25% reduction, this is the addition. You have to show a 25% reduction or more in gross revenue in any quarter in 2020 compared to 2029. Quarters are 3 months, obviously, in 2020, calendar quarters. So January through March, April through, so then you compare that to that same quarter last year, in 2019 from 2020. If any one of those quarters, there was a drop of 25% or more in gross revenue in your business, then you can apply for the secondary draw loans. What does that mean for a real estate agent? Okay, so if you're a sole proprietor, you'd want to look at your commission deposits in your business bank account for any quarter, for a quarter in 2020 versus any fourth quarter, that same quarter, quarter one versus quarter one, quarter two versus quarter two, quarter three versus quarter three, or quarter four versus quarter four, 2019, 2020. If you see a 25% drop in any commission deposits in any one of those quarters, 2020 versus that same quarter, 2019, then you may qualify for a second round of PPP. And the calculation is the same as it was prior. They look back at 2019's what on a sole proprietor's line 31, net profit of 2019 on your Schedule C on your 1040, and they divide that by 12 and multiply it by 2.5. The same thing you went through to get your original PPP in the same amount. And then as far as forgiveness of that, there's no clarity on that yet, obviously, but we assume it's going to be a similar situation where it's 24-week period, in 2021. We're not sure yet, but that's probably what's going to happen. Gross revenue for S corporation, those of you that are PAs and PLLCs out there as real estate agents, that's your gross revenues as a cash basis taxpayer. Similar, that's your deposits in your bank for those same quarters through your S corporation bank account. So accommodation and food services, they get a little bit more money. Instead of 2.5 times of last year's 12-month average, they get 3.5 times. Nobody on the call is probably a restaurant owner, so I'm not going to get too deep into that for the sake of time. So, so that's if you've already received PPP the first round and you want more, you got to show that reduction. Okay. What if you haven't applied and you're like, man, I missed the boat on the first one? You can still apply now. It's reopened. That August deadline's reopened again. And you can reapply. It's the same application, or you not reapply, but you can apply for the first time. That same application process as the first PPP is similar. It's 500 or less employees, and now it's included 501c6 organizations now are allowed to apply, which are like Chamber of Commerce's and those sort of organizations, which were excluded prior. So, just keep that in mind. If not to get into too much rules of the first time, because we already did that on the last call, and certainly you can talk to your banker or your bank about that when they reopen that. Again, banks I don't think have really reopened this yet, but there's an option here. There was an accounting webinar which thought that they might have a 25% restriction on income for this if you haven't applied yet, but I went to some really reputable legal websites, and as of 6 hours ago they were interpreting the bill saying that that was not the case. It's just the straight, you don't have to show a revenue decline for the first time appliers, just like the prior PPP. So that's the news I have as of this moment in time right now. Other PPP changes briefly, just for the sake of having it here, is non-payroll costs that are included in that 40% to get to it. They include PPE expenses for safety equipment for COVID and things like that. You can throw your expenses into that. Again, most people are covered in the 24 weeks by just the payroll amount for the forgiveness calculation. So you can use accounting and payroll costs, wink, wink, and any other kind of property damage is not covered. I don't know who really has property damage from COVID. Maybe in the Pacific Northwest where there's riots. I doubt that even is the case. But anyway, so the additional businesses allowed to apply now, housing cooperatives are 300 employees or less. I don't know what a housing cooperative, I don't want to spend time talking about it. I'm sure lots of people on this call know, but I didn't really even look that up. But basically, those can apply now where they couldn't before. Marketing organizations, businesses and bankruptcies can now, employers using retention tax credits, which I'm not even going to get too deep into for the sake of time. Broadcast news organizations, and again, 501c6 organizations can now apply for PPP. So now that I've talked about PPP, I'm going to briefly talk about SBA EIDL advances, because a lot of people that applied for the SBA EIDL, which is separate than PPP, got a little nice upfront kicker of money. It was a grant. It was not, and it's non-taxable. They clarified that. We were advising that before. But advances are up to $10,000 if you have 10 employees. That would be $1,000 per employee. Most sole proprietors, if you're not an S corp or you just have a 1099, or you're not making enough income to justify an S corporation yet. Basically, the advances were probably $1,000 for a lot of sole proprietors. Those of you that basically applied for the EIDL, and then the SBA reached out to provide more money to a loan later for some of you, or sometimes they just said, here's your $1,000, have a nice day. But basically, and there's no repayment for that. But now you don't have to reduce your PPP amount by the amount you got in this EIDL advanced, which So when you forgave the PPP, you'd have to pay back the advanced EIDL you received. You don't have to do that anymore. If you've already applied for forgiveness and they made you reduce your PPP forgiveness amount by that amount because it was before December 27th, I don't know what to tell you. You're gonna have to reach out to your banker and figure that out, but nobody knows yet what to do about that. So, but going forward, you don't have to worry about that. You can be used to pay. It can be used to pay for expenses that could have been met if the disaster did not happen. That's what the EIDL was for, and they were for suffering economic injury. Again, they don't need to be repaid. You can apply for a new EIDL advance now. You have to be located in a low-income community, have suffered an economic loss of 30%, probably calculated on the revenue. More clarity is going to be coming out on that. So you can apply for the EIDL advance grant, tax-free grant. Don't have to pay it back if you did not get one. We don't know what we'd have to research what the low-income community area was and the specific economic loss situations. But go to the SBA website. There's going to be information. I just want to let you know that that's there. If you did have a big drop in 2020 versus 19, there could be more money for you to go look out into the EIDL, or if your business is located in low economic community. Basically for you realtors, that means that if your home office is in a low income community or something that couldn't fit the bill, we're not sure yet. So I don't want to expand too much on that because again, there has to be a lot more clarification coming out by the SBA on what that means, and and then likely the SBA needs to publish that further guidance, but at least something's there to kind of keep your eye on. All right. Stimulus payments, more to come. So for individuals that receive $1,200 per person, now it's $600. They've already started sending out direct deposits. The Treasury did, the IRS did. It includes dependents that are 17 and under in 2019, even if they're older now, still based on 2019's 1040 tax returns. All the allocation adjustments are made on 2020's tax returns coming up. So if you've already received stimulus and didn't get stimulus and you should have gotten stimulus, you'll get it on 2020's tax return because it's called an advance rebate calculation. So it's really on 2020's return, but it's for 2019. So I don't want to get into the calculations of that. Again, for the sake of time, just know if you didn't get it and you should have received it, then it'll be added to your 2020's taxes and you'll get it there. Or if you got too much, here's the interesting thing. And not to get into detail about how you can get too much, but it could be timing issues. It could be somebody passed away that got it or something, all kinds of reasons. Or a kid turned 18, 19, you don't have to pay it back. That's one of the stipulations if they overpaid you based upon 19's calculation, which is kind of cool. But they're starting to come out with the reconciliation form for that on 2020's tax return. And we've reviewed it. Looks pretty logical for the sake of that. But anyway, phase outs still apply. You don't get this if you made over 75,000 or if you're single, or 150,000 if you're married, file a married filing joint return. Phase outs are $5 for every $100 above that phase out threshold. So it starts phasing out the more money you make. So a lot of people that made more won't get any of the stimulus payment. But if you got it the first time, huge probability you're going to get it. You might even want to check your bank account at this point because they already have your bank information. They already have everything, and they've already probably started putting that money in there. So unemployment benefits. There was a PIA, basically a federal government gave states money to give to people that were out of work for COVID-related purposes, and it was $600. Now they've changed it to $300 a week starting January. It was set to expire. That expires March 14th, 2021. And this is interesting for real estate agents if you are or have been collecting that as a sole proprietor. There's an additional $100 a week on top of that for workers that have both wages. So if you work in a W-2 and you're selling real estate on the side and have self-employed income, there's another $100. So that could be $400 a week. Again, we all know what kind of process Florida had with unemployment. They were, all over the news nationally as being, a very poor state as far as getting these things out and moving forward for people. But just know that this has been extended until March 14th for anybody who knows somebody that is collecting unemployment. Next thing, and we're moving along pretty well. I'm a little bit over time, but I expected that. But for 2020 and 2021, you can deduct charitable contributions without itemizing deductions. So if you itemize deductions, don't itemize deductions, there's a $600 adjustment to income for your tax returns that you'll get, and or $300 if you're not married. So something to just be aware of. Business deductions of meals in 2021 and 2022, not 2020. They're normally a 50% deduction for business meals for your business. Again, business meals can be taken out customers or clients, bringing in restaurant catering for a open house, those sort of things for real estate agents. It's no longer limited to just half that as a tax deduction, half of what you spent. They're allowing 100% deduction on your expenses for 2021 and 2022. Note, it's not 2020. So moving forward the next 2 years, and the meals have to be provided by a quote restaurant. A bunch of accountants are Googling what is a restaurant or looking up the definition of what is a restaurant. Again, we don't have guidance of what a restaurant is as far as this is concerned until the IRS and the Treasury really understands what that is. But it's just a bigger tax deduction for things you are already spending on. Don't go out and spend a bunch of money at a restaurant when it's not going to generate any marketing value to you, just like anything else, right? So other changes, just briefly, earned income credit changes. This is, I'm not even going to go through this because it's not significant really to a lot of people. Retirement withdrawals, if you had COVID or COVID related issues and you had to pull money out of your retirement accounts, those penalties, it's taxable if it's a traditional or regular non-Roth, but their penalties, as long as you pull it out within 180 days, are abated at this point. Still, that was extended. There's an employee retention credit, that's for employers, not going to get into it. The Families First and sick leave changes for employers. There are some extra benefits and changes there for that. Work opportunity tax credit for different employers and people have been extended, not really pertaining to this group. Education credits for college and things, those credits have been extended into this year and as of 2020 as well. So just things not to get into too deep here for the sake of time, but just to make you aware of in this bill, those are some of the other things. Another thing, which I didn't put in a slide, is that when you have real estate property that is forgiven, through either short sales or other ways, much of the time that you'll get a cancellation of debt 1099-C form, and there's certain ways to get out of that from a taxable standpoint. Not to get deep into that, that's a whole nother seminar. But basically, they've extended the COVID-related reasons for that to be, if you miss your mortgage payments, you can't pay you're out of whatever work, and you have short sale or get out of your property. They've allowed for mortgage debt forgiveness to be taxable, non-taxable through this year as well. So, that's just one of the big ones that might impact the real estate market. I mean, back during the recession in 2010, that was allowed, and then they took that away. Obviously, everybody was short selling their homes. We had a client every hour coming in with 5 rental properties and short selling every one of them, that kind of situation. But that was helpful during that economic time. And I guess the IRS says, hey, if it's COVID related and there's reasons to have to short sell property, certain properties, then we're going to exclude that from tax. Normally, that would be the amount of debt that was canceled. Again, there's 100 other calculations that go into this, but for the sake of simplicity, normally the cancellation of debt would be taxable in most cases, or a lot of cases. They've removed that for residencies. And again, I don't want to get too much into that right now. If we need to talk about that at another call, we'll set that up. That's fine. Anyway, so here's our contact info. And if you want to set up a consultation or appointment, there's Jackie's information. She runs our tax client services. She's a coordinator there, and she'll get you in, and we can do Zoom calls and secure client portals for tax preparation. So everything's virtual this year, and probably will end up being a lot moving forward by the looks of how well things are working that way. So that's our information. Write it down if you need us, and I'll open it up to a few minutes of questions. I know I pretty much am at the 29-minute mark, and I have 30 minutes. So I just wanted to make sure. I figured I'd answer a lot of the questions just by talking through these slides, but I know there's probably a million questions. But I'll just say this, is that probably most of the questions that you're going to ask cannot be answered at this point because this bill hasn't been fully interpreted at this point.
That makes complete sense. And thanks for that's very detailed. That was great stuff. Seriously, that covers exactly. Can you hear me okay?
Perfect. Yeah, perfectly.
Okay, perfect. Bob. Good deal. So here's the situation is that I'm going to share my screen so that there we go. I think you covered perfectly a couple things. Normally, and I believe we talked earlier before you came on about our 1099s being issued early because we have to report by March 31st now instead of, I'm sorry, by January 31st. So we're going to send those out. But generally, we send out some information with your information in the 1099s. Is that correct? So
yes.
All right, yeah, perfect. So we'll try and do that again. If not, we'll make sure that Todd's information is on our preferred vendor site on our back office portion of our website, so you can find all his contact information. They do a fantastic job. I get asked a lot, hey, I need an accountant that really understands real estate, right? And our go-to person is Todd and his group because they do a lot of stuff for your clients. By the way, if you have clients that are not in real estate that need tax assistance and other insurance and everything else, Todd, they handle that as well. But if somebody that understands taxes from a real estate agent's perspective, as well as a consumer of real estate, i.e., hey, I sold a second home, I've got all these different types of things, Todd really understands the intricacies surrounding the real estate market. So he comes highly recommended by us. Does a fantastic job. Go ahead, Todd.
Yeah. Thanks, Bob. Yeah, I just want to add, and we have a team of about 15 of us too that we work in a group, and that really benefits our clients as well. I'm with the group, and it depends on the specific client situation. Some of our accountants might have a little more experience in certain things than others, and most of our accountants in our firm now have over 10 plus years experience. So, and most of which is obviously in real estate. Just being here in Florida for this many years, obviously we work with people with assets and money and businesses, and a lot of those people, it involves real estate and agents and everything else that goes with it. So, no, I appreciate it, Bob. And yeah, that was detailed. It's hard to, I backed out a lot of things. It's hard to give something like that without getting a little bit deep into it. But the takeaway here is, look, if you think you might have had income drop, look back into getting more PPP funds. If you didn't apply for a PPP yet, it's going to be out there. Jump on it, talk to your bank, communicate with your bank. If you had income drop, then you're going to look at the EIDL again. And there's a few more tax things that might benefit you. Obviously, if you use us or a tax and accounting firm, they'll be helping you figure all that out when they prepare your return. But we're here for you, like I said, all year. And Bob, I appreciate it. One question was about the meals slide. I saw that. Just to reiterate that, the meals deduction is 100% deduction for 2021 and 2022. Again, not 2020. It's normally only a 50% deduction. The IRS just cuts your meals deduction right in half because I don't know why. Maybe they just think everybody, anyway. But now they're doing it at 100% as long as it's from a restaurant. Again, we don't know what a restaurant means, but we can just try to make sure it's from a restaurant at this point.
That's perfect. That is perfect. And I know it's a lot to take in, guys, but bottom line is, as far as it applies to you guys personally, I think Todd did a great job of describing the fact that if you got original monies, PPP monies from round one of the PPP, good news is, in essence, you just got this newest legislation made that money basically tax-free. All right. So in essence, we don't have to count it as income, yet we still get to deduct the expense that we use to qualify for the forgiveness. So it's basically tax-free money, and you're kind of getting it you got the money free, and then you don't get taxed on it as well. So it's really it was a bonus when I was doing my year-end quarterly calculation. I factored that in, that I don't have to count that money I received as income. Number one. Number two was that If you're going to go for the second round of PPP, then quarter over quarter is what we like to call it, right? So you compare, like Todd did a good job of describing, quarter one of 2020 versus quarter one of 2019. If you can show that you had a 25% reduction in revenue, so let's say you had in quarter one of 2019, you had $10,000 of commission income in quarter one of 2019. And in quarter one of 2020, you had $7,400, right, of income, as opposed, that is a 26% reduction, right? So it's greater than 25%. So you would qualify for this new round of PPP and be able to get that forgiven. If you don't have a quarter that you can prove that, you can check with your banker and see, but and your tax person, you might be able to get the money, but it may not be forgivable, is what I'm assuming. I don't know, or may not even be able to really apply for them. You just can't apply.
You just can't get it.
Okay.
They're not going to give you the loan
Right.
because they're only
Which
saying
makes sense.
you can only dip back in if you had financial hardship the second
Right.
time.
Got
The first time, if it's your first time, that's not the case. But they're saying if
Right.
you're going to dip into our funds again, there's got to be further economic hardship proven at this point, whereas before you didn't necessarily have to prove it. So.
Okay, perfect. And that's great clarity there. So just realize that going forward and going in. So that is great. And then Todd, I know last time we had you on like in March or April, right, when this was first going, right? And we followed up with one of our virtual office hours where we had you on for just an hour to answer questions on a more intimate setting. We had like 10 or 12 agents that joined the Zoom call. Maybe I'll reach out to you and see if you have some bandwidth in the next, 30 days or so, that maybe we wait until we get some further clarity on everything so you can really answer some good questions. And if I could, steal you for an hour, that would be awesome.
Yeah, sure. I'd be happy to, Bob, for you. And just let me know, and I'll let me know in advance here because we're rolling into tax season, obviously.
Yeah.
But yeah, I'd be happy to, Bob. Absolutely.
Okay, real quick, before I lose you, I do have two questions. Is there any reason you may not want to apply for relief, even if you qualify? For instance, could it affect your ability to obtain a mortgage, refinance, or decrease your buying power? Other possible. Is there any reason, if you do qualify and you meet all the criteria of either round one, round two, whatever, that you see that it could negatively affect them? It's not going to affect their credit report or anything like that, correct?
Well, let me answer this another way. Is that the one motivation that the accounting community has been trying to get their clients to apply for forgiveness of the PPP loan is so that it'll be off their balance sheet. So when a lender looks at your business or looks at, your debt to income ratio for your business, they're basically looking at, what loans you have outstanding. So in the very rare case, in fact, I didn't have a client. I just talked to another accountant in Iowa that did have one client where their banker was like, hey, maybe we should take that off there and do the forgiveness as soon as possible. That way, because once it's forgiven, it's no longer a loan, right? It becomes non-taxable income, which is not a loan anymore. So to answer the question, as soon as that PPP loan becomes forgiven, then it's no longer a loan and creditors won't even look at it regardless, okay? Even as a business loan or a personal loan regardless. So there's no risk there of doing it. I would say do it, and then as soon as it's forgivable, worry about it then. I mean, free money's, if you need it, it's a good thing, right? So
right. And in that sense, once it's forgiven, it's to borrow a legal term, it's like expunged from your record, if you will, right? That there's no, we don't see any reason why somebody would go back and make a business loan decision in the future based upon whether you accepted PPP money in the past.
Yeah, and from what we've determined, and the SBA is not allowed to really publish the loans received if they're under certain thresholds, which would be well under the thresholds for almost everybody on this call. I don't know that for a fact what that amount is, but I think it's either the 2 million mark or the 1 million mark. But again, I only have a few clients that are in that area with these. So for most people, it's expunged, like you said. It doesn't exist. It just shows up as non-taxable income on your, it doesn't show up. It's not on the balance sheet anymore. it's removed, and then it clears after, after that year, anyway. So.
Perfect. Okay. And then there was one other question, says there was no history to prove before. And I think they're talking about, Pat, and correct me if I'm wrong, that there was no history of loss needed to prove in round one. You still had to have a history of the payroll because that's how they determine the amount of the loan. But there in round one, or if you haven't applied for round one, you can apply now under round one rules that you don't have to prove a quarter over quarter loss. But now you do. If you got round one and you're looking for round two, you have to show a quarter over quarter loss of at least 25% in revenue.
Yeah, and exactly. I just want to expand on that though. There is still a requirement that you needed the money, okay, or that you think you may need it. Now, nobody has a crystal ball. We don't know what tomorrow holds. So there's kind of the, there's kind of the gray, I guess, if there is one, but there's very specific verbiage on the application that you attest to that says, something along the lines of that, due to the unforeseen circumstances, you expect you'll need the money for economic hardship reasons. But, again, it's what you expect. It's not what may or may not happen. And so just be aware of that. Just because there's no specific economic drop situation doesn't mean that you shouldn't still feel like you need it to apply for the loan, says the application. Okay.
Perfect. Awesome. Todd, we've taken more of your time than we were allowed to, so we appreciate your time. I know it's a little busy time for you. January through April is, and you're not going to get that free extension this year, I don't think, right? Where they extended you to July or whatever it would do it.
The filing season, they just put it out there. Is the IRS just put it out there? Is going to start around the 24th or 27th of January. We just talked about that in a staff meeting this morning. So that's excellent news for us, for everybody. So that's an indication that they're probably going to still have the April 15th as the filing deadline. We have for 1040s and for S Corps March 15th. Those are the deadlines. So we haven't heard anything differently as of now, and all things indicate, especially with them not making this PPP non-taxable, the forgiven PPP, that's going to allow the IRS not to create a bunch of unique forms, which will probably make sense that the filing season will be a normal time. But again, if you check back to our website, look at our blogs, go to our Facebook page. I'm not, I put updates up there. Everything that's going on is updated. If you again, it's as simple as liking our Facebook page, Unbehagen Advisors. You can always check back to that. And if you're a client, obviously, we're sending you organizers here in a week or two in our share file, and you'll have information there as well. Everything you need. So feel free to contact us with anything or any questions that you have. So
beautiful. Thanks again so much, and we'll be in touch and maybe see if we can schedule that hour for you once we have a little more clarity even on this. So
good, and there will be more stuff as well, Bob. So I look forward to it. Yeah.
Awesome. Thanks again, Todd. Have a happy New Year. Blessings to you and your family.
You too, Bob. Thanks so much.
All right. Thanks. Awesome. All right, David, we get you. Let's catch a couple minutes. You said, did you anything you want to keep us out of jail? I got you 7 minutes to keep us out of jail.
All right, quick factual scenario. I just want to present it, and you can comment on it. If you are the buyer agent, 30-day loan approval period, 29th day, the lender says, "Hey, I just need 24 more hours. I need the 31st day, and I'll get you an approval." Buyer agent, you being the buyer agent, you reach out, you prepare an addendum for the signature of the sellers agreeing to a 24-hour extension of the loan approval period. The seller's agent says, "Hey, I got it. Seller's not available. You're approved. No sweat. We have no objection. You got it." The agent insists, "Wait a minute. No, I need a signature." And the seller's agent says, "No, what? Don't worry about it. You got it." Sends back a text. it's in the text, it's approved, seller's approved, and the agent persists, wait a minute, no, I need to have signatures. Email comes from the seller's agent. It's approved, don't worry about it. We waive signatures, don't worry about it, you got it. Day 30 passes. Day 31 comes. Nothing happens. Day 32 comes. Seller agent sends an email that says your contract is canceled. So what's the answer? What
Who wins that one, right? Well,
who wins that one, or what, if anything, should the buyer agent have done that the buyer agent did not do?
well, my opinion, and you can correct me, and we can see if anybody else has a chance to weigh in, but my opinion would be that in that scenario, by extending the day, that's fine. But on day 31, if you have, even if it's an implied, and we can get in the argument whether or not we really had an extension by the listing agent saying we're good, who cares? The listing agent's not a party to the contract as far as I know. So I'd like to have at the very least something signed, ideally, at least an email from the seller that I could go to court with saying, here, this is a seller's email saying they approved the 1-day extension of the loan approval period, number one. Number two, if day 31, let's say we go with that implied extension of the extra day, day 31, if I do not have a loan approval, right, all I did was extend that day 1 day. So then the buyer agent still has the obligation, or the buyer still has the obligation to provide a loan approval or a notice saying we do not have a loan approval, but we are going to continue with the property as if we did have loan approval. Because if nothing happens, right, going moot or mute on this means that the seller on day 32 has a 3-day window kick in that allows them to unilaterally cancel the contract. Did I pass?
Well, consider this. On line 518 of the contract, it says no modification to or change in this contract shall be valid or binding upon buyer or seller unless in writing and executed by the parties intended to be bound. As soon as I was presented with this scenario on day 32, I said, boy, I sure hope, number one, the seller does not get an attorney. And number two, I hope the seller is not aware of the provision that I just read. And sad to say, it's on page 10, line 518. The attorney who was retained was aware of this provision, and given that language, an email assurance or a text assurance does not satisfy that line. So as tempting as it might be to say, well, I've got it in writing, they've approved. You're gonna, if the other side is aware of this, or they have an attorney who's aware of this, the position they're going to take, especially in this market where there are competing offers, and the seller, as soon as the seller is aware of a competing offer, will tell the seller's agent, listen, agent, if there's any way at all, then we can dump buyer number one. Let's dump buyer number one. So if I'm the seller's agent, I am hoping that something like this happens, because as you alluded to, Bob, there's if there is no extension, and on day 31, the seller, day 31, 32, and 33, the seller has an opportunity, is not conditioned on anything. It's the seller's right, number one, to terminate. The buyer may get their escrow back. That's what the contract does. But
David, what we're referencing here, I have it up on line 109 of the contract, beginning if buyer fails to timely deliver either written notice provided in 8B3 or 4 above seller expiration, or to seller prior expiration of loan approval, then the loan approval shall be deemed waived, in which event this contract will be continuous if loan has been obtained, provided, however, seller may elect to terminate this contract by delivering written notice to buyer within 3 days after expiration of the loan approval period. That is a unilateral, one-sided. The seller has the sole exclusive right. If they did not provide any of these notices, the buyer's agent or buyer, any of these notices, then the seller has the unilateral right to cancel or terminate the contract. Give the money back to the buyer, doesn't matter, but because to David's point, they're sitting on a $10,000 higher offer waiting for buyer number one to blink, and buyer number one just blinked, and they're gonna move on. So that is a very, very true to life. We cover that extensively in our real estate contract class on FHR University under paragraph 8. I have a section by section class. And in that, that's why this is highlighted. And you see my extraneous notes. If the buyer does nothing, allows the loan approval to expire with no notice, the loan approval shall be deemed waived and deal with to proceed as if the loan approval is in place, except for the fact, and I say this on the class, that we point out that the seller has that unilateral right to cancel. And again, new year, new obligations, new commitments to your business agents. Okay, here's a new commitment. Know your contract. Know your contract. This is the contract we use 97% of the time, right? Know your contract and be able to advise your clients on, say, hey, look, you can read it just like I can, but here's my reading. You need to confirm. If you're not satisfied with it, consult your attorney, yes. But it's pretty straightforward what occurs here. I even have a nice little flow chart that I have in the class that talks about, here's some if-then scenarios. What if we don't have loan approval? What if we do? What if we do nothing, right? I have a little flow chart of how things, so David, it's a very valid, and it comes up more often than you would ever know as a broker who gets to be in charge of 7,000 plus transactions a year. It's very true and very good info. So awesome. I think we do have one question. Let's see. If the buyer knows they can't get the written extension, knows they will get the loan and wants to continue, what should the buyer agent do? Great question, Pat. Therefore, during the loan approval period, all right, if it hasn't been extended in writing, then in that first loan approval period, the buyer needs to give notice, and it can be a written notice, that the buyer is aware that they have not obtained loan approval, however, elects to proceed with the contract as if loan approval has been given, or the verbiage, let's get to the specific verbiage here. If buyer, oh, it's back up on the previous page. The buyer may, number one, waive the loan approval. I mean, they're waiving their financing contingency, if you will, but doing so in writing during the loan approval period, in which this contract will continue as if loan approval has been obtained. That would stop the seller having the right to give their 3-day window, or to have their 3-day window to cancel. David, you got something to add?
One thing to remember, anytime you give notice, it's a two-part process. One is sending the email, and just as important is requesting an acknowledgement that they have received it. Because if you send an email and they take the position that they never received it, then you have a problem.
It's exactly right. So yeah, just sending it. And so you send it in an email with a read receipt, a delivery receipt. You send it via text. You say, hey, look, I just sent you an email regarding the buyer's this. You make a phone call, everything you can to prove that delivery was made, so that you don't have to do that. So Pat, I hope that answers your question, but yeah, as much notice. Oh, perfect. Good deal. And Andrew, Bob's contract planning class, FHR University. You should have a login that you received when you joined Future Home. If you don't, then reach out to Jim or Chris Feigen, Jim's assistant, who has your login. Or if you go in there, you can just request forgot password. FHR University has all that information there. So We are at our 11 o'clock mark, so we want to wrap up. It was great. We did hit the 100 mark. I think we had 104, 105 as our max. So good job. It's always great to see you. One last thing I want to promote is a week from today, we are starting our next version of our round of our book club. It's our virtual book club. The information will be on the FHR calendar, so you can find the Zoom class for that. You don't need to, you can get this book. We're going to introduce the book on next Tuesday, and we'll give you that time. But if you want to get a jump start, we kind of take it slow, 1 or 2 chapters at a time, and go through the books. This one is called Spin Selling, S-P-I-N, Selling, by Neil Rackham, R-A-C-K-H-A-M, Neil Rackham, Spin Selling. Would love to have you come join us. It's a virtual club. It's at 10 a.m. on Tuesdays, except for the Tuesdays that we have office meetings. We'd love to have you there. As always, if you need us, reach out. We're here to help. Don't forget about the 1099s to review those, all that stuff we talked about earlier, and look for those in the mail. David, thank you for joining us. Todd, thank you for joining us. Mara, thank you for moderating, and I hope you guys have a fantastic week. You guys are the best. Talk to you soon.